Welcome to Outlook 2025. It is Wednesday, February 5th, 2025. I am Bob Simpson, Vice President, Portfolio Strategy for Wealth Stewards, and I will be your host this evening. For tonight's Outlook event, we have chosen a mix of interesting and timely topics: global trends and their market impacts, clean energy's economic role, and the future of estate planning. Now, tonight's program is set up to leave you time to ask questions. So if you have any questions for our panelists, you can use the Q&A button on the Zoom control panel to post your questions. We will try to address as many as possible at the end of the event. Now, please don't be intimidated. There are no bad questions. Now, to familiarize yourself with the Q&A panel, take a second, try to see if you can find it, and then just type in something like, "Hey, how you doing?" or "Hi," in there now, just so that you can get used to it. Now, secondly, a reminder to our panelists that our audience is comprised of individual investors. So let's try to avoid industry jargon. Let's keep it simple so everyone in the audience will enjoy listening and learning. So thank you very much to everybody, our guests and our listeners, for joining us this evening. So without further ado, we're going to dive right in. Martin Lefebvre is a 20-year veteran of the financial markets. He oversees the tactical asset allocation and investment solutions at National Bank Investments. He has held senior roles at Private Banking 1859, NatCan Investment Management, and Desjardins Group. He has a master's in economics degree from UQAM, and needless to say, he has a deep understanding and experience in looking at economic and political landscape in both Canada and the United States. So let's just get this ball rolling, Martin. How you doing?
I'm all right, Bob.
Yeah, I heard.
Thank you for having me.
Yeah, Martin said that he's a little under the weather, so we'll give him a bit of a break on how he's feeling tonight. But he's a pro, so he'll fight through this for us this evening. So Martin, so we're all watching the news. I think there's somebody who's sort of monopolizing the television.
Who would that be, Bob?
Screen days. Yeah. He's got a guy who's missing an ear, part of his ear, I heard. But we've seen lots of changes. Changes are just like every day we can get something new if we watch TV. But it seems like we're just getting started. So besides what we've seen, the changes that Trump has already talked about, changes to economic policies, trade agreements, tariffs, what impact do you see that these changes are going to have on Canadian citizens and investors? Like, let's not look so much at Canadian markets, but just more Canadians and investors. How are they going to be impacted by some of these changes, and what are you seeing out there?
Well, like you said, there's a lot of volatility on there, and uncertainty, I guess, is the right word to use. And it's not going to be over anytime soon. I mean, there's many changes ahead of us. That's the Trump policy, and we'll have to live with that. But let's not forget that the past or the first 4 years of his first term weren't all that bad. And also remember that the current backdrop is pretty good. I mean, when you look at manufacturing activity, which is on the curse of rebounding, when you look at the unemployment rate in the US, when you look at job creation, when you look at real growth in terms of wages in the US, that's all positives. And that's why people are expecting that this sort of environment where everybody was foreseeing a recession in 2023, which, it didn't happen. Now people are starting to believe that for a very rare occasion in the midst of a tightening period from central bankers, that this time around we could avoid a recession, and we're sort of in the middle of what we call a soft landing. So a soft landing is a good spot. Inflation has come down. We're somewhere towards 2%, which is the target for central bankers. There's still more rate cuts in the pipeline, and economic growth in the US is above potential. So for investors, that's all, it's almost like Goldilocks for investors. And just because of that, we think that the current backdrop is positive. Now you got Trump coming in. He's is throwing a lot of things out there. Will it be tariffs or whatnot? And then you have to think, okay, tariffs, is that inflationary or is it more deflationary? Because it's going to have a negative impact on future growth, obviously, because that's an impediment to future growth. So it. There's a lot of uncertainty, but the current backdrop, what we start with, is quite positive for you, North American investors, not to say the least. So that's all. That's the kind of thing that we're looking at, and that's our starting point. Now, what happens after that? That remains to be seen. Now, he proposed 25% tariffs across the board for his, neighbors, whether in north or south. That was postponed. Now it's only like maybe in 30 days there'll be that'll hit the markets. We saw an immediate reaction from the dollar when that was announced on Sunday. The dollar temporarily intraday reached a high of 148, which was kind of unforeseen. But as soon as he opened the doors to, well, we're not sure about that 25% tariffs, and maybe less, and maybe not for now. It's going to be postponed. Then gradually we saw that the currency rapidly appreciated soon after, and now we're below 144, a point that was a point lower than what was observable just before the announcement. So there's a lot of uncertainty, and that's things that we'll have to juggle with in the near future, Bob.
So what we're seeing from Trump, this is really Trump style that he is that he's using in doing this. This is his normal way of doing things, which is kind of get in there, mix the pot up, get everybody excited and upset, and then he slides in what he's really trying to accomplish. What are your
Well, I don't know if
thoughts?
he's mixing the pot or stirring it,
Yeah,
but
yeah,
one or the other, yeah. So it's having an impact, that's for sure.
yeah,
Yeah.
for sure. So, we could spend all day talking about Trump, but we're not going to do that. I think all you have to do is turn on CNN and you can get that story. One of the things that really drives financial markets is trends. Now, a couple of trends that we've experienced over the past year or so is artificial intelligence and cloud computing. They've kind of been the two that really, the market going into last year was pretty flat, looked like nothing was going to happen. Then all of a sudden, artificial intelligence popped on the screen and the market took off and never stopped. What impact do you foresee that change that, what what do you see? I'm not really, I'm saying, what do you see going into 2025? What are the major trends that are going to drive financial markets?
Well, that may well continue, maybe not at the same pace that what we saw in 2024, because it was very rapid. It caught many of us off guard. Um, but one thing is for sure is that it's a new thing, and it's probably there to stay. It's here to stay with us. It's not going away, and we saw that it started with OpenAI, and then Microsoft bought a large bit of that, and then they started with ChatGPT, and then just recently, maybe China, kind of threw a wrench
Yep.
in all of this with the DeepSeek, which turn things around with especially the hyperscalers, which have put a lot of money into developing large language models in the U.S. Over the course of 2024, and the expectations were that to create a newer language or a more powerful one, you need more powerful chips that would use a lot of energy, and they would cost something like in the hundreds of billions of dollars to develop, and that would mean, like large data centers, and a lot of money was invested in all of that. And then when DeepSeek arrived, saying that using an open source model from Facebook, they were able to develop their own model
Mm,
at only $6 million, using a lot less energy than all of those hyperscalers. So that
mhm.
kind of shook things up in the at the start of the year, and that's why those mega cap stocks in the U.S., Nvidia, not to name it, lost nearly 40% of its value from the very top. But if it weren't for that little event, which is meaningful in itself,
Mhm.
most of the rise in Nvidia stock was reflecting the growth in its earnings base. And it's not just we're not. What I'm trying to say is that we're not in the 2000s where every .com company would make a lot of money just because it was it was that kind of bubble that was developing. This time around, these big players are really making money, and it will stay with us. Now we're in the phase where we have those chip makers or chips developers that are really making the money. And then you got the hyperscalers like Microsoft, Meta, and Google of this world that are also making money because they've got the money to do so. But eventually it will go down to apps makers that will develop things that will be useful for the society. And that's the hope, where all of this technology will be used to increase productivity worldwide. And then we can be in a period where, same with the creation of the computer in the 80s and then the internet in the 90s, eventually we'll get a gain of productivity that will be useful for everybody. So I think we're just at the very beginning of something that it could be very, very big in the years to come. And that's why we continue to believe in this idea of US exceptionalism in the
Mhm.
markets.
Yeah, and even some of the reports that I've read is the forecast for AI is 28% annualized growth over the next 5 years, cloud computing at 18%. So, if that happens, this is a big market. Could be a big opportunity. Everybody's always afraid of some of these new things when they first come out, but then, I remember when I first heard about Google, right? And I said,
Oh,
"Well,
yeah,
that's
and then
that's
we thought it was expensive at $500, a few years back.
I know.
And now look where it's at.
Yeah, it's pretty crazy." Um, we can't have a conversation like this without talking, and you've already touched on inflation, interest rates, and the dollar. Uh,
Mhm.
we did see that spike, and I thought your comment about the spike in inflation was quite interesting when we spoke the other day about where it came from nothing. Uh, just touch a bit on inflation and how that, the effect of that on interest rates and where you see things going.
Yeah, well, of course, it's sort of the balancing act, or the aftermath of COVID, and the reopening of the economy. So there was a lot of supply issues, and then inflation went up like crazy. Um, and it was mostly transitory in nature. So even though we raised interest rates, inflation came down, very rapidly soon after. But the the devil is in the detail, and eventually you got oil prices going up. That feeds into transport prices, and then you got this sort of
Mm,
vicious wheel going on. And then all of a sudden, wages were going up. We were at the end of a cycle, sort of in the overheating type of economy, and then inflation was more persistent in nature.
mhm,
So central bankers had to raise rates. They raised it very rapidly. That's probably what caused the downturn in 2022. But we were talking about those mega cap stocks. Facebook was down nearly 70% at some point. Apple and Google and all of these big names were down nearly 30-40%. So there were huge bargains in 20 at the start of 2023, and that's why we saw that big rebound in the stock market that followed suit. But the story behind the rally in 2024 is more that we started the year with central bankers saying that probably most of their job was done, and they were ready to embark on a more accommodative, cycle, and they started lowering interest rates soon after that, and that really would fuel the market in 2024. But now, recently, as last Wednesday, Powell, the Fed chair, said that they would pause for a little while. Most of the job is done, but they're waiting to see what's going to happen with the tariffs and if that's going to be inflationary in nature or so. But we figure, or we think, that in 2025 there could be at least two more rate cuts by the Federal Reserve, and probably three to four more rate cuts by the Bank of Canada, just because our economy is more on shaky grounds. Unemployment rate is already at least 2 percentage points higher than in the U.S. Things are improving a little bit from last year because rates were taken down a lot, so that's kind of accommodative. But still, there's a little bit more to do, I think, in terms of kicking things off for Canada. So we figured that at least 3 to 4 more rate cuts will be possible, and even more so if the tariffs are implemented at 25%, like what was
Yeah.
suggested by Trump. And if that happens, then obviously we're in line for more than just a slowdown. I mean, an outright recession could be in the cards. If that happens, that's a scenario that was suggested by the Bank of Canada last week, and in their monetary policy report that was published at the same time as their rate decision.
Mhm. So let's take a look at the Canadian dollar. I have a interesting question. I think it's interesting is, do Trudeau governments like the Canadian dollar at 69 cents?
If they like it,
Yeah.
like if
See,
it's there's
it's where it was when Pierre was in and Justin came in, it's back to 69 cents.
yeah, what's
Is that just a family thing? Is that a
yeah,
family
it's
thing?
and the irony of all of that is yeah, in the second term of the father in the early '80s, if I remember correctly, yeah, the loonie was quite weak as well.
Yeah,
Well,
maybe
I don't know if they
46.
like it that way, but
Yeah.
it's certainly not reflecting the strength of our economy. So usually, there's two things behind currencies in Canada. Usually, it's oil prices and interest rate differentials. So the fact that the Bank of Canada has lowered interest rates much more than in the US
Yeah,
is really the reflection of the weakness in our currency.
got it. So finally, to wrap things up, let's look at equity markets. We've had a bit of a Jekyll and Hyde equity markets since the extreme lows in 2020, the S&P 500, which has really been driven by the Magnificent Seven stocks like you had talked about, NVIDIA, Microsoft, Apple. It's returned 25% per year, but it's kind of done it in three phases, right? Like it was up 119% through 2021. Then we had 2 years of zero return and then 25% last year. What do you see in 2025?
Well, usually when you get two spectacular years like we got in 2023 and 2024, you're bound for, lower returns. That's the math of things. Valuations are quite high. We measure that as the price to earnings ratio. So you name Nvidia and all of those Mag 7 stocks. They're pretty expensive. So when you're about to pay for that much for a stock, returns have to be in line with that. And even though earnings have justified the price action over the course of the past 2 years, disruptors like DeepSeek last week are kind of raising the question: Are we paying too much for these stocks? So all in all, usually when you have valuation this high, you're bound for a stock market that doesn't have any multiple expansion. So the best you can hope for is really the earnings estimates, and right now it's somewhere in between, I'd say 7 to 10%. But the least bit of bad news would probably lead to multiple contraction this time around instead of expansion, and that's why we have to lower our odds of double digit returns for the stock market, whether it's the U.S. or anywhere else in the world. We find that relatively speaking, North America is still in a good spot. Canadian equities are fairly cheap when we look at their counterparts in the US. And if there's a rebound later on, either linked to the weak currency or the fact that interest rates have been brought down by a wide margin in Canada, then the TSX, which has had a pretty good year last year, to be honest. Sometimes people link the economy with the stock market, but most of the stocks that we're buying in North America and elsewhere in the world are more international in nature. We do business with everybody, and most of these stocks are multinationals. So sometimes it's not a direct link to see, okay, the economy is weak, then the stock market is going to be weak. And last year, the TSX was really the reflection of that, with the stock market having probably one of the best, being one of the best places to be invested last year.
Yeah, good rebound in banks and energy stocks have been strong, and that's what the TSX is made up of. So, yeah. So why don't you take a few minutes? I know you're feeling under the weather. Go grab a Neocitran or something. Sit back and we'll now bring on our next guest this evening. So thanks for doing that. We'll talk to you in a bit.
All right, see you in a bit.
Okay. So our next guest is Akua Carmichael. Akua specializes in customized estate planning and administrative solutions with expertise in wills, trusts, and intergenerational planning. Seasoned estate lawyer, frequent speaker. She holds LLB and JD degrees and is a member of the Law Society of Ontario and STP. Akua's practical strategies address evolving needs of families and aging demographics. So, Akua, you on there?
I'm here.
Yeah. Hi. How you doing?
I'm well. How are you, Bob?
Thanks for taking time out of your evening to join us this evening.
Absolutely. Thanks for
Yeah.
having me.
Yeah. So Akua is one of the newest members of the Well Stewards team. So we thought it'd be a nice way to introduce her to people like yourselves who are joining us this evening. So we had a chat. One of our conversations leading up to this, that one of the topics that kept coming up was demographics, right? In 2022, this is the fifth, I don't think I've mentioned this is the fifth outlook that we've done starting in 2020, 2021. But in 2022, we had Kenneth Gronbach, who's a demographer, as one of our panelists. And at that point, he pointed out that even though millennials have surpassed baby boomers in size, the boomers still make up a massive part of the population. So, Akua, when we were talking, you mentioned that there are really three key facts about baby boomers that are undeniable, right? That's a big word, isn't it? Undeniable. So let's start. What are those three key facts that you're seeing?
And I can summarize them, make them short and sweet.
Yeah.
Baby boomers are getting older. They're living longer. And the stats show, and we'll get into this a little bit more, that baby boomers, along with other Canadians, are not preparing as adequately as they could or should as it relates to estate planning and getting older and living longer.
Okay, so that's an important point. Let's just take a step back. Let's do those 3 points again.
Okay.
Okay.
So baby boomers are getting older.
Mm-hmm.
They're living longer, and they're not as prepared as they could or should be for aging and estate planning in general. And I should also say, not just aging, but the inevitable D word that none of us like to talk about, but is very much a part of life, death, right? There's a 100% chance that we are all going to die.
Mhm.
And it's not the most fun topic to talk about, but it is an eventuality. And so, yes, there are lots of issues around how well we're doing as Canadians, including boomers, and being prepared for the inevitable.
So the D word is really another undeniable, huh?
I like that,
I
Bob.
like that.
Very sharp.
Well, I got dressed up for it this evening, but yeah. So we kicked that off. So let's go look at some of the numbers then. Beyond a few more gray hairs and aching joints, how do we know the Canadians are getting older? And what are some key stats that really paint this picture for us?
Sure. So Statistics Canada has, puts out all kinds of information, and they've indicated that by 2031, 1 in 5 Canadians could be 65 years or older. When we look at the baby boomer generation, Statistics Canada also indicates, again, by 2031, that the youngest set of boomers will be 65. The oldest will just be turning 85. And these numbers matter. They're important because as the boomers are aging, we know, I want to back up for a minute. Another stat I want to share is, you indicated they're a very large percentage of the population. In Canada, they number over 9 million in terms of the members of this generation, and they also hold the most wealth. So the fact that they are getting older, they are retiring, And we're already seeing this intergenerational wealth transfer. Many, there are lots of articles out there talking about this great intergenerational wealth transfer to the tune of $1 trillion. And we're seeing it. There are, people talk about the bank of mom and dad. That's come up quite a bit in the last few years, given the cost of housing. And so what we're seeing is boomers get older, they are retiring, they are transferring wealth to the next generation. They have business, for owner managers, entrepreneurs, they have businesses, issues around business succession, transferring business interests to the next generation. Is that going to happen? How is that going to happen? All of these issues come out of the fact that this particular segment of the population is aging, getting older and living longer.
Yeah. But that's the next point, right? Is living longer. Canadians are living longer. And you said to me when we talked, you said, I've got a question for you. And I could tell you what it is, but I want you to start thinking what I might ask you. And now I'm ready for you. What,
All right.
without the use of AI, because I only do everything with AI right now, but without AI, I'm ready for your question.
Awesome. So, Bob, tell me,
Tell me.
how many Canadians over the age of 100 are alive right now?
Okay. So how many Canadians are over 100? And we read about people in the newspapers that this war vet, turned 102 and things like that.
Yep.
Our mayor in Mississauga, before she passed away, Hazel, was 103, I think. Okay, so I'm going to think 1,200. 1,200.
And is that your final answer, Bob?
1,200 final answer.
Okay. Good guess. But you're way, way off.
Really?
So if we go back to our friends at Statistics Canada, the number is actually a lot closer to 12,000.
Wow.
12,000 Canadians. When I saw that stat, I was really shocked. I had no idea we had so many centenarians amongst us. And that's good, right? We're living longer. And in fact, the life expectancy in Canada, the age of that right now is 83.
Mhm.
And the expectations are that number is just going to continue to increase over time. And so we are living longer, absolutely, and we can expect to continue living longer. And the question is, are we prepared for that? I'm obviously, given my background and the work that I do day in and day out, I'm always thinking about estate planning and the impacts of living longer and what that means, for us as we're continuing to age in this country.
Yeah, what I'm hoping is that I can stay a certain number of years behind that future number, average life expectancy number, just for a few more years,
Well,
right?
you never know.
Get out and walk, get out and stay in shape. So your final point was Canadians are unprepared, right? So when it comes to estate planning, what are you talking about? What are the biggest mistakes or oversights that you see that are leaving Canadians unprepared for that final destination, I guess?
Well, when I talk about Canadians being unprepared, it's really based on the stats that we're looking at. And, there have been a number of different polls on the issue of estate planning. And the numbers range somewhere between 48% in 2022. Ipsos did a survey on Canadians and found that only 48% of Canadians had wills. And then Angus Reid, that was in 2022. Angus Reid did another poll in 2023 and found that the number had gone up a little bit to 50%. And it wavers back and forth. On the Ipsos poll, the one done in 2022, a number that I found really surprising was that less than 30% of all Canadians have an estate plan. And an estate plan is not the same as having a will, or I should say having a will is not the same as having an estate plan. A will is a component of an estate plan, but it's certainly not all of what would comprise an estate plan: powers of attorney, trust, insurance, living will. There are a number of other components that would make up a full estate plan. And so that to me is very concerning, that less than a third of Canadians say they have an estate plan in place. We know with older Canadians, they tend to do more planning. That's very, very common. But even according to this Ipsos survey, what was found was that 44% of Canadians 55 and older would say that they had an estate plan in place. That's still significantly below 50%. That's still a lot of Canadians that haven't planned and are not planning for some of the things that happen when a person is living longer. I attended a seminar last year and heard some really interesting discussion around the topics of health span and lifespan. Lifespan, really speaks to how long we're going to live. Health span speaks to what condition we're going to be in as we continue to age. So we're talking about these, 12,000 centenarians. One of the questions is, what condition are people in as they get older? The Alzheimer's Society of Canada indicates that by 2030, there will be close to 1 million people in Canada that have dementia. And that's a 65% increase over the numbers that were available in 2020 in terms of cases that are expected. And so questions around, how do I plan to deal with incapacity if I have dementia and I'm not able to make financial and or personal care decisions? Is there planning for that? Questions around just who's going to be involved in helping handle a person when they're compromised in this way, when they're not capable of carrying out some of these things for themselves, abound. And ensuring that planning is in place becomes really, really important. Another point I'll make just in terms of living longer and planning for that, and that's really the incapacity piece where powers of attorney become really important. I like to call powers of attorney like the ignored younger child or the ignored child in the family. I'm a middle child, and I feel like middle children are generally ignored. I have an older sister, younger brother, and I do feel that I was ignored a little, but we're not going to talk about that today. The point is,
So, pardon, what was that you just said?
I talked about.
I'm kidding.
Okay.
I was ignoring you as a middle child. I didn't mean
Thank you, Bob. Thank you very much. But there is a lot of, I do feel like powers of attorney get the short end of the stick. When we're talking about estate planning, there's a lot of emphasis on wills, not so much on powers of attorney, which are equally important because, again, we're living longer. We don't know what condition we're going to be in. And so it's really key to make sure that we're not leaving out key parts of our estate planning.
Yeah. So just wrapping up because we try to stay exactly on time. We got about 2 to 3 minutes here.
Okay.
3 or 4 key takeaways.
Right. Okay. First one, in terms of what people should be thinking about or doing, I would say just get your plan in place. Canadians know, like survey after survey have shown that Canadians know they need wills, they need powers of attorney, they should be doing their planning. But for whatever reason, people are not doing their planning. I think with older Canadians, it's not so much. Studies show that some Canadians say they don't have enough money, they're not successful enough. I think with older Canadians, with baby boomers, they've been amassed significant wealth. They have assets and they're aware of it. I think a lot of times people are just really busy and it falls off the radar. It's not top of mind. And so one of the things I would say, if you're struggling to actually just get your planning in place, is whip out your phone, pick a date on your calendar and make a decision. I'm going to reach out to a lawyer. I'm going to reach out to an estate planner, and I'm going to get the ball rolling. And to make sure it doesn't fall off is really connect with your financial advisor, with your lawyer, with your accountant, your professional advisor, and ask them to hold you accountable. I need to do this planning. I'm committed to getting this done in the next 3 months. Can you reach out to me in 2 weeks and just, keep me on track because I really want to make sure I'm getting this done. That's one of the keys. And then one of the other takeaways is just in terms of people who get started but don't finish. And so if you actually reach out to a lawyer or someone who's helping you with your planning, you have a great meeting, and then they're emailing you and you're not responding, really important to just make a decision that I'm going to continue and I'm going to finish strong. In terms of planning, we talked a little bit about intergenerational wealth transfer. Trusts are a really useful vehicle for dealing with transfer of assets to the next generation. I'm meeting more and more individuals, very successful owner managers, entrepreneurs. They build very successful businesses, but their children either have no desire or they don't have the skill to take over the business or continue to manage, the operations. And so setting up trusts where the person who is the owner manager, they've built up a successful estate, there are large assets, setting up trusts so that you're transferring to the next generation, but not giving them so much that financial legacy is going to be dispersed very, very quickly. Trusts are a great vehicle to make sure multiple generations can benefit, and that legacy is protected. So I think it's really important as well.
Okay, so please hang around for some questions at the end. I know that Shelby is keeping track of all of the questions for us, so we'll see you back in a few minutes.
Thanks.
Next on the agenda, and I'll call this a power panelist, Matt Kennedy. Matt leads the acquisitions and business operations for Skyline Energy. Since joining the firm in 2017, he has contributed significant expertise in asset acquisition, financial analysis, and clean energy valuation. Also serves on a clean tech committee advocating for clean energy adoption in Ontario, reflecting his commitment to advancing sustainable energy solutions. This is an area that we have just recently added into our growth portfolio. And Matt, thanks very much for joining us this evening.
Thanks for having me.
Yeah, you're welcome. So big picture, what's happening in Canada's energy market right now? We hear a lot about Canada's shift towards clean energy, but is that reality? Is this really happening, or is it just a lot of talk?
Yeah, we are seeing it. In Canada's electricity market today, Bob, is actually in a really good spot. About 80% of our electricity in Canada comes from lower non-emitting sources of energy. And really that's among the lowest in the world. A lot of that's really due to our hydroelectric generation. About 60% of that supply comes from those hydroelectric generation resources we have, mainly in sort of, Newfoundland, Labrador, Quebec there. They're the really big drivers for that. But other contributors are nuclear facilities we have. Solar and wind also play a role in that. And in the energy mix, really province to province is determined by the resources available there. But so some do have more fossil fuels, but across Canada, we're in a really good spot. In terms of, where we're going, are we actually making a shift to this energy transition? Yes, Canada set a target that by 2050, we want to have a net zero economy. What that means is between now and then, we have to go from electricity being, less than 20% of our overall energy mix in Canada to more than 40%, and really become the dominant end use resource there. What's really driving that is, everyone sees a lot more EVs on the road, the electric vehicles on the road there. We're seeing, the buildings and new industrial uses are changing. The steel manufacturing business using more electricity, with automation. We're seeing data centers. I'm using an electric lawnmower now, an electric leaf blower. So we're just continuing to see that, the everyday resources and tools we have are being electrified. What goes along with that demand is where is the supply going to come from? What non or low emitting resources and infrastructure is required? And a lot of this is expected to, up to 99% of it's expected to come from wind, solar, nuclear, or even renewable natural gas is a new hot topic for us in the industry. Solar specifically is supposed to be one of the most economic choices for utilities and power producers in most regions. It's expected that solar generation in Canada will need to increase by 20 times between now and 2050. So just a huge increase there. And really that's a lot of that is because these distributed energy resources. So meaning we produce power where the power is needed most. So rooftops of commercial buildings in those, high density areas, able to put these types of resources there. And really the declining cost of technology and the installation of those is really helping push that. So I think, to end that, it's important to say Canada has a really strong energy mix. All the different types of infrastructure we have, wind really produces a lot of power at night versus solar during the day. Our nuclear facilities are really that baseline load that we need to have to sort of meet the everyday demands of Canadians. So we're in a really good spot in Canada currently, but we have a need for a lot more power between now and 50 to hit those aggressive targets and also consumer behavior.
So you're seeing shifts right now where there is good backing for these kinds of things rather than let's just throw a big power plant up in northern Ontario or that sort of thing. Are we seeing that now there are good programs in place that are helping organizations to adopt to this type of change?
Absolutely. I think, the carbon pricing is something that sort of was introduced into Canada and not always a favorable thing, but really was meant to put a cost of carbon in the economy and spur the creation of those greener and more sustainable options within the market. But the one I like the most that's out there right now, and is the Clean Economy Investment Tax Credit. And that's a federal program that sort of provides a 30% tax credit applied towards the capital invested into, green and sustainable projects like solar, like wind, like biogas. And that's really been a big driver for new investment recently in Ontario. In Ontario, really the solar industry was booming, and renewable energy industry was booming between 2010 and 2018. There was a lot of money invested because of the incentive program, the guaranteed rate, long-term contracts. They were highly subsidized at the time, but it really gave Ontario a nice footprint for this renewable energy. It got the industry kickstarted, but when those dried up in 2018 and weren't being offered, um, we went from over a decade of stable electricity and certainty there to we're now looking at sort of we're going to have a shortfall as soon as 2029, 2030 there. So they are putting things in place that can help us to spur that growth. We're currently seeing that a lot of the provinces are wanting to recontract a lot of those existing assets out there. So really give us the certainty that we can continue to invest in these types of projects. These are stable, safe investments. They have a long-term outlook. And we're also seeing the big banks and financial institutions, private lenders be really attracted to this, which is also helping, I think, spur the growth in our industry. They really like those longer term contracts. They like the low volatility of that asset class and industry. So yeah, we really are starting to see the government really push help here. But what we're not looking for anymore is these high subsidies. I think that's an important to note for where the industry has matured and developed over the last decade is the costs has really come down. So the renewable infrastructure industry doesn't rely on those subsidies to be cost competitive with other traditional fuel sources for Canadians.
Yeah, so somehow Akua missed the Trump question. She's the only one on the panel who got away without that one. There's a lot of in politics. They're talking about cutting off power exports to the U.S. What's that going to mean to Canadians?
Short answer is no. It's not going to impact the long term forecast. Really, we're sending excess power to the U.S. That's mainly generated at night because of the base load that our nuclear and hydroelectric facilities create. So you can't shut those down at night. It's too expensive, and you can't really shut down hydro ever. So those really the purpose of selling energy to the U.S. is to help lower the cost of electricity for Canadians. So there would be a short term impact into actually the end use consumer as those prices would need to rise if that revenue source was lost. But no, if we were to shut that off, there wouldn't be an oversupply, because really the way the energy market, in Canada works is really we have those high peaks. When everyone comes home, they start their dishwasher, they start doing the laundry, they turn their lights on, they now plugging in their EVs. We really have that peak. So we have introduced or seen what's introduced is these ultra low overnight rates. And really, it's meant to incentivize Canadians to use more power during the nighttime, avoid using it during the peaks, and really help smooth that power demand throughout the day. So, um, no, it wouldn't really have an impact. Maybe short term in terms of just a little bit of higher pricing, but nothing. I don't think that's going to really impact the average Canadian to a great extent.
Now, before we sort of when we were in the waiting room waiting to do this, Matt said to me, well, I had to come home this evening and have a shower, out visiting a biogas facility. And he said, I guess you don't come away smelling too good when you come from one of those places.
Well, it is a waste facility, and we're there essentially trying to collect as much gas as we can. So we're taking a lot of organic waste. So the biogas industry is something that's really neat. It's been very hugely adopted in European countries, and has started to make its way to Canada and the U.S. And we actually got involved with it a couple years ago, and it's really neat. It sort of meets two demands for sort of the renewable infrastructure and also the waste diversion mandate. So these facilities are able to collect organics, basically capture the gas that would have otherwise gone into the atmosphere then, and use that gas to either power large generators to create electricity, or even be upgraded to get to renewable natural gas quality and injected into the grid, which helps really meet those large oil and gas producers meet their GHG reduction targets. What's sort of left at the end of that is actually a really nutrient-rich fertilizer, that then goes back to the agriculture industry, spread on the farms, and used to grow new food. Goes back to the grocers, food waste comes back to us, and really cool circular economy story. So yeah, it does smell a little bit in there, but sometimes I come away thinking it smells like money too. So it's in a really strong position, and I think that's a growing industry that has a lot of legs.
Yeah. Now, final question is, let's talk about investing in clean energy. Energy demand's growing. Clean energy seems like a no-brainer. What should investors be paying attention to? It's kind of a long-term opportunity, but what are the risks? Is it, how are you setting up investments for the individual investor in Canada to take advantage of the work that you're doing?
Well, I think it's important, the type of investment you're going into and really understanding what the underlying portfolio is made up of. For us, we really target operating assets, that have a good history to them. They have strong contracts, with sort of creditworthy counterparts is a big feature for us. But what we really like, and a lot of what I've talked about here today, is we see this increased demand, that's happening right now, and having that connection point, having the ability to connect to our Ontario grid, our Canadian grid, and put power on there is a very valuable thing. So for us, when we look at opportunities, we're not only looking at the equipment, the contract, but also, do we own the land? Do we have long-term lease agreements in place so that we can participate in this industry for years and years to come, if not decades and decades to come? So that's really what we're looking at is we have a very long-term approach. We see that, I mentioned today 20 times growth in the solar industry, specifically over the next 25 years here. And we want to be a part of that growth. But really, we want to be in the right place, to connect to the grid. We want to be close to the end consumers, and have good partnerships there. The cost to maintain these things can be low, but you got to be on top of it. So it's important to have a good team behind you.
Yeah, no, and the one thing that we liked about when we looked at the investing with your firm was that you really have much of your portfolio locked into long-term agreements, right? You know that you've got a contract to supply energy for a fairly long period of time, like 10 years in many cases, isn't that right?
Yeah, we've got about 10-year weighted average remaining on our contracts today, and unfortunately, we had the snap election called here in the Ontario province of Ontario, which means some programs have been on hold, but we're already in talks with the provincial government about extending those contracts out further. So yeah, that's really what we like about it is the low volatility due to those fixed price contracts, those long-term contracts. But also, because we have a need and a demand for this power, is they're looking out the next 20, 30 years past this and sort of saying you're essential to the success. You're essential to us meeting the energy demands of Canadians. So that's really, the angle we've taken, and we're always out there looking for new opportunities like that. Biogas, very similar to that. We run on a very similar contract, those guaranteed rate contracts, both for renewable natural gas and electricity as well.
Mm-hmm. Okay, perfect. So we are exactly on time. We've got about 10 minutes for some Q&A. If I could get our other guests to just turn on their cameras and microphones, then we'll be there. So I think the first one that I see is a question. Do you think that an emergency rate cut would indicate a panic to the Canadian market? So Martin, I think that would be for you.
Well, I guess it depends on how it plays out. If it's an intermeeting, if it's really because when all is said and done, it's going to take time for the tariffs to have an impact on economy and inflation. It's not going to happen overnight. So to lower interest rates, to react to that, I think would be maybe a bit too premature. And you have to understand that the loonie, the currencies also react to the tariffs being announced or put in place. And so the weaker loonie is also something that will do the trick for the Bank of Canada. So I don't think there's an emergency to do that, to do an intermeeting. And we're certainly expecting that over the course of the 2025, if tariffs are implemented, then the Bank of Canada will probably have to do more than if it's not implemented. That's for sure. But I guess we'll have to see how quickly it's done and how much of an impact there is to start with.
I was reading something the other day that, if there are tariffs don't mean that, hey, it's 25 and 10 as an example. Doesn't necessarily mean that those are being put on for 5, 10 lifetime. They all could be repealed fairly quickly, just like the Canadian government and the capital gains tax. They're kind of pushing that back. Do you see activity like that? Do you think that these tariffs are going to be on for a while, or is it kind of
Well, again, it
what's
depends.
up?
It depends what's the end game. If it's more of a negotiation tactics on the part of Trump, then we can expect that'll be temporary in nature. Maybe there'll be tariffs only on specific goods in Canada, whether it's steel or lumber or aluminum, to name those few. But it should be more of a temporary shock than a permanent one. That's for
Mhm.
sure. But then again, Trump made a lot of promises during his campaign, and one of those was, well, we saw with the what's happening with the border security and all of that, of the fentanyl crisis. So that's one. But also, he said that he would lower taxes, not only corporate taxes, but also for households in the U.S. at a time where the deficit is already at a very high level. So he's going to have to finance that. And in early March, there's going to be another shutdown in the U.S. because, as you well know, Bob, every year they have to lift the ceiling, the debt ceiling in the U.S. And usually it's just like a walk in the park. We know that it's going to happen, but when the deficit is at the levels that we're seeing right now, and we're talking in the midst of 6% at the time where the economy is doing fairly well. Like, it's a total nonsense to have the government spend that much in an environment where the economy is booming in the U.S. So I think that even some Republicans will be against that. So it remains to be seen how far he's willing to go and how much leverage he really does have. But part of the equation or the solution for lowering taxes comes from this tariffs and the revenues he's got to collect by doing so.
Hmm. Okay, Akua, question for you. Is it okay to have the power of attorney be the same person as the executor of the estate?
Yes, I mean, it is okay to do that. It's very common. I've drafted a lot of wills in my day, and spouses oftentimes appoint each other to act under a power of attorney for property, obviously dealing with finances, and a power of attorney for personal care, dealing with health care and other personal care decisions. And then they would appoint each other oftentimes as executor of the estate. So it's common. It happens all the time. Ultimately, what I would say is when you are making that decision of who's going to act under a power of attorney for property, for instance, because it's such a vast power that you're giving another person, you're giving them basically power to deal with your finances to the extent that you could, if you were capable and they have access to your finances and can make decisions, can do just about anything that you could do other than make a will. And so, ideally, it's going to be somebody you trust implicitly. If they're acting under a power of attorney for personal care, somebody who will understand your needs, your desires, and will follow through on those requests, and just respect the things that you would want them to do. And then acting as an executor or somebody who's going to work well with other people, be fair to beneficiaries, has good time management and organizational skills. So the short answer is yes, you can have one person acting in all these different capacities. The long answer is you want to pick whomever or whoever those people are very carefully based on their skill, their ability, and just the level of trustworthiness that you have in them.
Yeah, and there's, I had an appointment this afternoon with my CPA, and we were talking, and I brought up a couple of points. I said, hey, we bought a cottage a bunch of years ago. It's not our principal residence. There's a big tax bill on it. And I said to him, what can we do on that? And he said, yeah, there's a whole series of things that you can do. You could sell it now. You can pay the capital gains tax over a period of 5 years, things like that. So there really are, I think, a lot of strategies that you have in your quiver that are available to people, right? But people don't know that some of these things are available. They wait till the last minute, get a big tax bill, and go, oh, that was ugly. How do people get educated other than go to Google or AI or something like that and ask the question? Yeah.
Oh, it's really about connecting with a person who's obviously got expertise and knowledge, and that's one of the interesting things about estate planning. One of the things I love about this area of law is there's so much practical and important information for everyone to access, and there are a lot of myths, right? My sister's brother's cousin's teacher's father said, if you die without a will, the government will take all your money, and a lot of people believe that, and that's not actually true. There are intestacy laws that determine what happens if you die without a will. So ideally, you want to connect with an estate planning professional so that you can actually get some information. And again, a lot of times people think, oh, lawyers are so expensive. I can't afford it. And you can book an hour of time to meet with somebody and get a consultation. And there are a number of services, estate planning consultation services that are offered. Shameless plug, Wealth Stewards, we offer these consultation services as well. So, but the point I'm actually making is there are professionals out there that can assist you without you necessarily incurring a huge bill at the end of the day. Much better to get advice from a professional than from Google, particularly when these kinds of matters are concerned.
Okay. So I'm really picky guy that we started exactly at 7:00. We're going to end pretty dead on. Final thoughts, Matt, if you, final thought to leave with people this evening.
I think in terms of the power and electricity market in Canada, it's like I've said, it's growing. There's a lot of different opportunities depending on your take of whether you want to invest in solar or biogas or wind, or hydroelectric. There's a lot of opportunities out there. A lot of really strong Canadian investment opportunities as well that you can keep your money in Canada. And really, you don't have to sacrifice strong returns to invest in sort of a cleaner and renewable infrastructure in Canada, and there's lots of ways to participate.
Perfect. Martin, what's Trump said in the last 12 minutes, and what are your final thoughts? I think you're on mute.
Well, I guess what I was about to say was not really important if I was muted. I was going to say that Trump, all over the news, he wants to make Gaza a resort for I don't know who in the Middle East, but obviously that's not going to happen.
Yeah. And Akua, final thoughts?
Estate planning, obviously, we all know that it's really important. As we're aging, becomes even more important. There is a point in time where you may not be able to do any planning because you've lost capacity to do that. So sooner is dealing with planning issues sooner rather than later is very important. And I encourage all of us to do that.
Perfect. Okay, so to close it up for this evening, we at Well Stewards appreciate the time that everybody this evening has taken from their busy schedules, both our guests and those of you who have joined us as viewers. I want a big thank you to the people like CPA Ontario who shared the information about this webinar with their clients, members, and colleagues. Tonight's roundtable has been recorded. You will be sent a link to use so you can listen again, or you can pass on to an interested friend, family member, or business colleague. So it's a long evening. It's 8:01, and thank you very much to everybody for coming out this evening. And if you have any questions, reach out to us. You will be sent a link to this recording. Easy way if you have questions or something, you just want to send it back to us. Easy way for you to reply to that. So final thoughts. Thank you very much for coming out this evening. It's the 5th in a series of outlooks, and we appreciate your attendance this evening. Thank you so much, and have a great evening.